At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you.
Today, October 18, 2022, short sellers are sleepwalking into another squeeze. GameStop will likely surprise investors once again. In July, GameStop launched its NFT marketplace to a relatively muted reception. NFT trades had already fallen 3/4 since January, and traders assumed the game retailer had missed yet another party. Shares would eventually drop another 25%. Investor pessimism, however, has quietly turned GME stock into a short squeeze candidate. Sagging trading volume means that it would take traders almost 17 days to cover their short positions, up from 3 days in July. And with 30% of GameStop shares now directly held by transfer agents, the Texas-based firm has become a trap for short sellers who didn't get the memo the first time around. The risks of short selling. In 2014, I shorted shares of watchmaker Movado as a bet on rival Apple's newly launched smartwatch. Shares of Movado would slide from $45 to $25 before I closed the position at a significant profit. The emotional toll, however, was immense. Monitoring shares of the legacy firm was agonizing. Every day brought new fears of unlimited losses. And had I stayed in the position, the volatile short sale would have cratered my client's portfolio when shares jumped to $50 several years later. Unlike buying stocks, shorting them involves selling more when stocks go down and raises the risks of a wipeout. Movado would become my last negative bet, ever. Nevertheless, many institutional investors fail to remember the lessons of unhedged short selling. Memories of meme stock blowups from early 2021 are fading. And falling markets are tempting short sellers back into firms from Bed, Bath & Beyond to electric charging station EVgo. GameStop stock's hidden short squeeze risk. Nowhere is this clearer than at GameStop, a firm once short squeezed by Reddit's Wall Street bets to devastating effect. Since July, daily volatility of the video game retailer has declined by around half. On a per-day basis, GME stock now moves only as much as tech firms like Etsy and Snap, lulling short sellers into a sense of false security. Short interest now sits at 51.1 million shares, a 63% increase from this time last year. The put-to-call also ratio remains bearish. 1.52 puts now exist for every January 2023 call outstanding. Meanwhile, liquidity in GameStop shares has steadily decreased. At least 71.3 million GME shares are now directly registered with GameStop's transfer agent, according to its latest quarterly filing, up from 50.8 million in the prior quarter after adjusting for stock splits. Its free float today is likely less than 150 million once factoring in other closely held shares. Add in a declining stock price, and the dollar amount of daily traded GameStop shares has fallen from over $400 million last year to $90 million today. Much like the process of assembling a Super Smash Bros. Team, these diverse factors are setting the stage for a blowout fight. Rising prices force short sellers to buy back their stakes and offset losing positions. Narrow markets magnify upward price pressure, causing more short sellers to buy shares, and so on. The resulting short squeeze can bankrupt even the largest of hedge funds, as Melvin Capital realized in 2021 after losing around $7 billion that year in bearish meme stock bets. In other words, GameStop has once again become a short squeeze waiting to happen. Will GME stock get short squeezed this year? Timing a squeeze is risky at best. GameStop's shorted shares as a percentage of float remain well below the 2021 peak. Its recent squeeze potential stems from lower liquidity rather than more short selling. And prices of GME stock remain far above their 2021 values. Today, they trade at 1.2 times price to sales, compared to a 0.25 times ratio before the first short squeeze. Finally, GameStop's business outlook is in arguably worse shape today than when activist investor Ryan Cohen first stepped in. The gaming retailer has failed to find its way into e-commerce and can no longer rely on shrinking its inventory to maintain cash flow as it did in 2020 and 2021. The company could bleed as much as $600 million in free cash flow next year, earning it a lackluster B in my quantitative profit and protection stock picking system. From a purely probabilistic standpoint, such money pits underperform the market over 12-month time horizons. Nevertheless, retail traders have ignored such warnings. To them, it matters little that the company scores poorly on a proven stock grading system or that Wall Street analysts have a $16 price target on GME. Instead, they're interested in stocks that can rise 2 times, 5 times, 10 times and stick it to bearish hedge funds at the same time. So, if short sellers want to avoid the sleepless nights like I once had with Movado, they should consider quietly tiptoeing out of their increasingly risky GameStop bets. Because if Reddit's Wall Street Bets has it their way, GameStop will get short squeezed again soon. Is Carl Icahn about to buy GameStop stock? A picture posted by Ryan Cohen has investors speculating Icahn will buy GME stock. Ryan Cohen posted a picture with Carl Icahn, leading to speculation that the corporate raider could take a stake in GameStop. Neither individual has confirmed that Icahn would take a stake in the retailer. Shares of GME stock are down about 30% year to date. Speculation concerning corporate raider Carl Icahn purchasing a stake in GameStop, NYSE, GME, abounds after activist investor and GameStop chairman Ryan Cohen posted a picture of the pair on Twitter. GME stock is up 3.5% so far today in the wake of Cohen's post. Cohen rose to the spotlight after selling Chewy to PetSmart for $3.55 billion in 2017. He entered into meme stock territory in August 2020 after purchasing 5.8 million shares of GME stock, equivalent to 9% of shares outstanding. In January 2021, he was appointed chairman of the video game retailer. As of March 22, he owns a total of 36.4 million shares of GameStop through his investment firm, RC Ventures, making him the largest shareholder. Meanwhile, Icahn has been in the public scope for much longer. He founded his first fund, Icahn and Corporation, in 1968 and later founded Icahn Partners in 2004. Throughout his career, he has taken significant stakes in companies like Netflix, Blockbuster, and Lyft, which led to his reputation as the corporate raider. Icahn stopped managing money for outside investors in 2011 and runs a private hedge fund. However, investors can invest in his company, Icahn Enterprises, which has an annual dividend yield of 15%. Picture of Ryan Cohen and Carl Icahn stirs speculation. Speculation is just speculation until it is confirmed, and neither party has issued word on Icahn taking a stake in GME stock. However, retail participants have taken it upon themselves to imagine the possibilities that could arise. One Reddit user posted 3 scenarios that could potentially occur. 1. Icahn takes a stake in GME. 2. Cohen and Icahn will spin off Bed Bath & Beyond's Bye Bye Baby brand. In August, Cohen sold off his entire BBBY stake of about 9.4% million shares, representing an 11.8% stake. 3. Cohen will merge GameStop with Baby with Icahn subsequently taking a substantial stake. Icahn has dealt with retail businesses in the past and boasts a net worth of $18.3 billion, which sits at number 36 on the Forbes 400 list. As of the second quarter, his 13F portfolio had a value of $20.86 billion. His own company, Icahn Enterprises, accounts for 64.06% of his portfolio. Only time will tell if Icahn actually takes a stake in GME stock, so investors will want to keep an eye out for the latest updates.
Thanks for watching Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.